Hello everyone, and thank you for joining us on our first quarter of 2023 portfolio update here at Arrowhead Wealth Partners. My name is Cody Hines, and I will be your host today. I am a managing partner and chief investment officer here at Arrowhead Wealth. Throughout this presentation, you may have questions. We encourage you to write down any questions that you may have and reach out to our office via telephone or send us an email, and we will be happy to follow up with you on any of those questions. Let's get started. Here on our first slide, we are going to take a look at some information provided by JP Morgan Asset Management. The information on this slide reiterates our confidence in large cap value stocks compared to large cap growth stocks moving forward. On the left-hand side, you will see a chart that illustrates the price of large cap value stocks compared to large cap growth stocks. As you can see on the right-hand side of this chart, at the end of 2022, large cap value stocks remained relatively inexpensive compared to large cap growth stocks. On the right-hand side, you will see a bar chart with every sector of the S&P 500 listed, with the value sectors being listed in gray and the growth sectors being listed in green. What the bars represent is an increase in 1% of revenues for the underlying companies and the impact that it has on their operating income. What you can take away from this slide is that large cap value stocks are larger companies that have bigger balance sheets, so they do not have to finance debt at higher interest rates. They've been around a lot longer than large cap growth companies, so they've seen more market cycles, and they also provide a dividend to their shareholders, which helps investors combat some of the effects of inflation. Here on this slide, I will discuss the opportunity for the gold sector inside of portfolios. Historically, the price of the US dollar and the price of the gold sector have an inverse relationship, meaning that as the price of the US dollar decreases, typically the price of the gold sector increases. You can see this inverse relationship here on the chart provided by State Street Global Advisors, with the price of gold being listed in yellow and the price of the US dollar being listed in black. We recently saw a peak in the price of the US dollar at the end of September in 2022, and we have seen it come off of this peak here in the early days of 2023. We have reason to believe that this trend will continue as China has lifted its 3-year-long COVID restriction, and also many of the supply chain issues that increased the price of the dollar are now starting to be resolved. We also utilize the gold sector as a diversifier in portfolios, as it is not correlated with the market and helps mitigate risks. On this slide, I would like to take a little bit of extra time to discuss fixed income or bonds. Historically, bonds have offered stability and income for investors. In 2022, we saw the worst bond market in history, with the US Bloomberg Aggregate Bond Index being down intra-year negative 17% and ultimately ending down negative 13% for 2022. Now, there is no question it was an extremely difficult time to be a bond investor last year, with the highest rate of inflation we have seen since the 1970s, caused by excess stimulus spending, pent-up demand, and many supply chain issues that are still being resolved today. With that being said, we now have an opportunity to allocate towards a historically conservative asset class that now has the potential to pay investors more income than they have in quite some time. On this chart, you will see the most conservative types of bonds listed on the left-hand side and increasing in aggressiveness towards the right-hand side. The gray bars represent the 10-year range of income paid on these types of bonds, with the purple being the 10-year median and the blue being the current yield on these types of bonds. We feel we now have an attractive opportunity for investors to get more potential income in their portfolios while not taking on as much market risk. We now have an overweight allocation to bonds and also an emphasis on short-term bonds, as they do not take on as much risk as long-term bonds and still have the ability to pay a potential attractive yield. As I wrap up this presentation, we would like to leave you with a message about diversification. No matter what type of investor you are, young or old, the time horizons of your goals, short or long, or the amount of portfolio risk you're willing to take, conservative or aggressive. At the end of the day, diversification is your friend, even though it doesn't feel like it sometimes. On this chart, you will see the returns of the S&P 500 and a diversified portfolio from the years 2000 to 2022, along with all the emotions that come along with it. As an investor, it's easy to let the emotions get the best of you. When the market's going down, it feels like it'll never come back up. And when the market's going up, it feels like nothing can stop it. At the end of the day, having conversations about your goals and making sure that you're staying in a diversified portfolio are the only things that you can control. And at Arrowhead Wealth Partners, we're here to help because your financial well-being is our priority. On behalf of the entire Arrowhead Wealth Partners team, we want to thank you for joining us on our first quarter of 2023 portfolio update. If you have any questions about your portfolio or anything that we discussed on this slideshow today, please do not hesitate to reach out to our office. Again, we want to thank you all so much for being a part of Arrowhead Wealth Partners, and we look forward to talking to you soon.